Hello traders, welcome back to the channel. So finally we have some sort of encouragement for the traders as market has finally shown up some direction on the upside. Now today I'm going to spend a little bit more time on the daily time frame charts rather than the monthly. We will have a look little bit in the weekly time frame chart surely, but my main uh, aim is to study more the daily time frame chart. Now, before we go ahead and talk about the trend, we should understand the important support levels first. If you remember a few weeks back, there was a support level which was just beneath this recent low over here, which was made in the early August. And then we have this particular low. So I will mark it for you. This is the first low. This is the second low. All right. And now we can clearly see that the second low is higher than the first one. After that, we have this up move. If you give numbers or if you give alphabets like A, B and C, then you can clearly see that C is lower than B. And over here also we have a higher low. So basically we are stuck in a range, and that range on the upside is 25,200 and the lower side is probably 24,365. But this time the range is not choppy. This time things are changing, not just in the Nifty, but other indices also. I'll come talk about that later on. What we can see is that we have a trend line. This is not an exact trend line, but it was a trend line which came at a scenario when there was a resistance somewhere at 25,010 to 25,055. So this was the first resistance which Nifty has been able to surpass just in a matter of 2 days of consolidation. We can see the first up move came here, then there was a doji, then there was a spinning top, a bullish, small bullish candle, and then once again a spinning top. I will agree with all of you that all these candles which have been made over here are not at all impressive. I do agree. But at least we have some movement starting on the upside. That is a good sign. Fine. Even if you look in the moving averages, that moving averages displacement has now improved. The RSI is now improving. And when RSI starts trading above this high, which it has already started doing over here, it is a good sign. It is just a possibility, just a probability that Nifty is trying harder to even surpass this high, which has not been able to do so far. But the RSI is showing it has the power to do it. Okay? Now, if you go at the weekly time frame charts, in the weekly time frame chart, if you see, then there was more or less consolidation, which it's still continuing. But this week, the candle is much better than the last week. The last week we can see the bullishness was within a range. We also had a wick over here. This week the wick is not there. It is more of a fuller candle. So which means bullish. Weekly time frame chart is also looking better. It is not extremely great or it is amazing, but it is better than what it was last week for sure. So now coming to the main point, at what level should we consider that now things might improve? See, things have already started improving, but I think this is a major resistance which is at between 25,195 and 25,250. So once I think we start trading above 25,250, 25,300 levels, and it's not just about trading. It's not just about that we just give a heads up like this, we stay there for 1, 2, 3 days and then suddenly we start coming down. No, that should not happen. We need to stay above it, we need to trade above it, and we need to move above slowly and steadily. That is what is required. If the buying which will happen after the breakout, once we have a close above this particular level and then this buying continues, then that will infuse a lot of confidence in the mind of a trader. That is what is required. So let us wait for that level of 25,250, 25,300 to be surpassed. Once that happens, I think things will get even better. Now talking of Bank Nifty, surely we need to understand that Bank Nifty is one of the sectors which had underperformed very badly recently. And due to this particular sector, I think Nifty had suffered a lot. Now over here, what we can see is it has been able to bounce back pretty nicely. RSI was also oversold, which was a good thing. Now it is at a polarity. It is at a zone of resistance where 55,182 till 54,866. This entire zone is a resistance. And this is a resistance because this is a previous low. Also, this is a 50% and the 61% Fibonacci retracement. So once we close above this, that's the second thing. The first thing is we should start trading above Friday's high. Once we start trading above Friday's high, that will be a little bit of a kickstart for the upside move. And once we close above this resistance, that will be, I think, even icing on the cake. Even if you have a look to the weekly time frame charts, last week again we had a candle which was green in color, but it had a wick, and this time again we have a bullish candle, but it has slightly lower wick and very small wick on the upside. So I can say things are improving in the Bank Nifty front as well. And you can see this bounce back has come from a pretty decent previous high, which is a good support. All right. Private banking space. Now, private banking space was one of the bearish sectors which dragged the Nifty lower. This time it has been able to bounce back from a 50% retracement, which is also accompanied by a previous high. So this is a good time. This is a good zone from where the private banking stocks are trying to bounce back. Now, if you have a look over here, the displacement of the moving averages is still fine. The momentum has vanished, but momentum can come back any soon if this move continues on the upside. What we require over here in the private banking space is the sector should be able to trade above Friday's high. That is the first point. We should be able to trade above Friday's high, and we should be able to close above 27,400. This entire zone is a resistance zone for the private banking space. So this is the first point, and then this is the second point. Once this happens, then I think things will get better. PSU Banks. PSU Banks, I think they're already much better than the private banking space. Even if you have a look at the weekly time frame charts, they have been more or less consolidating. Monthly time frame chart is also okay. Only thing is, in the last two trading sessions, I think there was a lot of doubt when price approached this level. Some sort of profit booking was visible. So we can see also a little bit of buying happening over here when we have a wick on the downside in Friday's session. But I think if you want to see good momentum and trend happening, we'll need to close above this level of 7160 to 7200 levels. That is a minimum effort which is required from PSU banking space. Energy pack, well, it was one of the weakest sectors. It is one of the weakest sectors, but somehow it is trying to improve. It is trying to go higher. It was not expected from this sector, but it's still trying to do that. I think the minimum which is required is we trade above Friday's high and surpass this level of possibly 35,400. Then things might improve a little bit. But you will have to be slightly careful when you trade in the constituents of this sector. I mean the stocks of this sector. You'll have to be very watchful. Autopack. All right, Autopack I think continues to be in a strong uptrend. Daily, weekly things are fine, but if you check properly, you will notice one thing very, very openly, that now the distance between the moving averages and the price is much higher. RSI has gone into the overbought zone. RSI is into the overbought zone even in the daily time frame charts. So I think the leadership which was there in the Autopack earlier when Nifty started moving higher, I think this now should be replaced by some other sector. If Nifty want to continue its rally higher, it needs to be replaced by some other sector. But because I think there can be some short-term profit booking and consolidation in the Autopack. Consumer durables. Consumer durables, I think one of the bullish sectors, monthly time frame chart looking great. weekly is absolutely fine. Yes, we do have a gap over here, but in terms of candles, I think nothing negative is visible as of now. In the daily time frame chart, we have gone for a dip, short-term dip, but probability says that this dip may be bought into. And if you go to the next sector, which is the consumption sector, it is very much similar to the consumer durables. Only difference is that the momentum in the consumer durables was less, but in consumption sector, the momentum is pretty nice. Again, it's trying to go for a dip, a short-term dip, and higher chances that after the dip would be bought into. Finance pack, one of the sectors, sorry. Okay. So finance pack, one of the sectors which was again responsible for dragging the Nifty down. And if you check over here in the finance pack, if you can check properly, okay, this is not a negative, this is not a positive divergence, but you can say one thing, that when this particular sector has bottomed out, if you notice properly, this is the first candle which has a lower wick, then this is the second candle which has a lower wick, and this is the third candle which has a lower wick. So what does this say? This says very clearly that even if the sector is getting pulled down by sellers, I think the buyers, the bullish traders are dragging, or they're pushing the sector on the upside with the help of heavyweight stocks. And it is tremendous, because the reason is, if you check this particular resistance over here, this is not an ordinary resistance. If you can see over here, there is a lot of choppy movement over here, but with the ease the sector has been able to surpass is pretty respectable. So I think finance pack moving higher will be in the favor of the overall markets. FMCG pack, if you have a look in the weekly time frame charts, monthly time frame charts, extremely choppy. In the daily time frame charts, also choppy. So I think until and unless the heavyweight stocks in the FMCG pack, they do not move, because despite the GST rate cut, FMCG sector has not been able to move, and the counterparts like consumer durables are moving. It's high time that the FMCG sector should move. That is the reason I'm saying that until and unless the heavyweight stocks in FMCG pack do not move, nothing is going to work out. IT. Well, I just have one word to say over here, that's volatility and drama. That's it. The reason for why I'm saying volatility and drama is because you can see that it was one of the most weaker sectors. It gave a pullback. After the pullback, there was a sell-off. And then after the sell-off, there was a sudden gap up openings back to back. And it was a vicious opening. If anyone who is trading into derivatives and would have been short in the sector would have got stopped out very fast. And probably the reason why this happened was, it was very simple, that we were trading at a 61.80% Fibonacci retracement, and from there suddenly we have a bounce back. Now from here, what's going to happen as of now, I would stay away. I would not like to comment. I would like to wait for the sector, for the IT sector to give me some cues that whether it's going to consolidate, it's going to surpass this and go higher. I have frankly no clue. So let's wait and watch till the next week, and then only we'll take a call on it. Metal pack, I think it's visible very much that it has been able to give a breakout. If you're following me on my Twitter handle, I had clearly shared about the metal pack that it's trying to give a massive breakout, which has been able to do. And this breakout is coming in the sector because if you can see, this low in the metal pack was not broken. And I was consistently repeating about this particular sector in many of my videos, that even if the sector, when it was not moving, it was outperforming just by staying there. When the entire market moves down, if one sector is not moving down, it is outperformance, and now it is getting rewarded by moving higher. Okay, so I think the uptrend might continue in the metal pack. Infra, I think it is still consolidating, and you can see it is still within a range. Maybe one or two stocks, if you go and check into the constituents of this sector, they may or may not outperform, but overall it's very choppy and sideways, so nothing great. Pharma pack, if you have a look in the daily time frame charts, yes, it will look a bit choppy. It'll look like sudden down move, up move, down, up. It look choppy, it look range bound, but if you have a look in the weekly time frame chart, you will understand that this is not a sideways consolidation. Yes, it is a consolidation, but it is more of a consolidation where, after a decent up move, the sector dips, goes for a small consolidation, and then it gives a range breakout. It's that sort of consolidation. So I think there is a decent chance in the pharma pack that it may start outperforming in the next few weeks, because even in the monthly time frame charts are looking pretty impressive. Only thing is we will need a confirmation by the heavyweight stocks of this particular sector by moving higher. PSE, I think the overall momentum in the monthly time frame chart not that great. Even in the weekly time frame chart, it's trying to bounce back from this 50% retracement, although it has not been tested, but it's trying to bounce back. And in the daily time frame chart, you can see that this bounce back has dragged it back into the resistance zone. And this resistance zone is between 95.52 to 96.67. So once we surpass this and we start moving higher, things might improve a little bit more. If you have a look in the Realty pack, again, Realty pack is looking a little bit more like IT sector. Even Realty pack is trading near the 61.80% Fibonacci retracement. The trend is down, the momentum is also down, but the daily time frame chart is hell of a lot choppy. Even the RSI is like sideways. It is not even consolidating and going lower. It is more of going sideways. And even if you look at the weekly time frame chart, RSI it's going sideways. Even the monthly time frame chart is RSI is sideways. So I think it's a lot choppier and sideways, and it's better to stay away from the sector for time being, until and unless we don't have a confirmed breakout on the upside or even a breakdown on the downside. Nifty India Defense. Well, Nifty India Defense in the weekly time frame chart, it's trying to improve. It's trying to bounce back. Probably it's trying to bounce because this was a previous high. Yes, I know that it has not been able to trade over here, but at times, what happens is markets and sectors have their own minds and they can bounce back much before the supports get tested. So the candle over here, last week's candle is very, very impressive. It's a really mouth-watering candle. And even in the daily time frame chart over here, you can see two back-to-back big green candles. So early times to see that whether it will outperform or not, but at least I can say that it's looking much better than how it was looking last week. All right. Midcaps. Midcaps, again, in the weekly time frame chart, things are improving. A big green candle. In the monthly time frame chart, although the candle is not yet complete, overall the state of trend is better. In the daily time frame chart also, things have started improving. The displacement of the moving average is also improving, and we have started trading above this high just for one single day. If we continue to trade higher, then the momentum can improve in the mid caps as well. So I guess by summing it up all, by looking at the Nifty, things are changing. Things have started improving on the upside. Sectors which were underperforming like IT, they suddenly shifted gears on the upside, and why it has happened, I have no clue, but that needs to be seen. Auto sector, which was outperforming, now needs to consolidate. Metal pack is already outperforming, which is great. Pharma is trying to give a breakout, which is not able to do yet. FMCG needs to follow suit. I mean, it needs to follow consumer durables because both sectors are a little bit correlated. The main sector which needs to outperform for Nifty to go higher is mainly banking sector, especially private banks and the heavyweights in PSU Banks. All right. So yes, things are better, but do not get extremely encouraged seeing that, okay, we have a breakout. No, this is still not a breakout. This is just a pullback, and we need to see a bit more in Nifty to call it a proper up move and a breakout. All right. So be vigilant. Things have started improving, but don't be overconfident also at the same time. Trade less, trade wisely. Thank you.